Hi, I'm Clifford Bennett from Herston Economics. Well, we said all last week, buy the dip. The dip sort of edged on into Thursday, Friday, but it was certainly a buy the dip week. This week is going to be one of the most powerful. In fact, the next 2 weeks, I think, are going to be two of the more powerful weeks we've seen for stocks, commodities, and currencies, non-US dollar currencies. I think we're going to see huge gains. The most conservative scenario I can come up with for the ASX SP200 is that it's in a range of 4,800 to 5,000. We'll work that range for a while before it breaks 53, 56. Since last year, the Herston Economics forecast for this year was 5,600 by year end for the ASX SP200. And I've said before, I think on this show, that really, if anything, that's too low. So we could go a lot higher. In fact, 6,000 isn't out of the question this year, given that markets still have yet to price in a global economic boom of proportions we haven't seen before. Oil price, it's not topping out, it's consolidating to go higher. The higher oil price will not slow the global economy. The oil price is going higher because the global economy is so strong. That's what people have to come to terms with. And it's because that global economy is so strong that gold and oil are going to be higher, all commodities are going to go higher. And for Australian resource companies, a lot of people are saying be careful because the higher Australian dollar, the gains in the Australian dollar that we expect to 108 this year, 112 next year, are nothing compared to the gains that these companies will experience from higher commodity prices. And you have to remember that our major markets in Asia, their currencies are going to be appreciating as well. So there's an offset there against our higher currency. They'll still be able to afford our product. They'll still want more and more of it, and that's what will continue to drive prices higher. So Australian resource companies are still cheap, cheap, and cheap. There aren't going to be any interest rate rises in Australia. We're going to have GDP number for Q1 could well be a slight negative. If that causes any pullback in the market, it'll only last a day or two. Make sure you buy that dip as well. It may not even see a pullback because the most accurate rationale is that a negative quarter in Q1 from the floods and from the Reserve Bank hiking rates too far last year, a negative first quarter will, if you like, entrench the view that there's not going to be any interest rate increases this year, or at the most 25 points in the last quarter. That means interest rates are stable, another reason to buy equities. Around the world over the weekend, particularly today, I think in the big fund managers, in the big banks, and the big brokers, the bulls and bears at the morning meeting would have actually been arguing with each other. At some point this week, I think you're going to see the bears capitulate and the whole market around the world is going to go, oh my goodness, we're missing out on the biggest economic expansion ever. We need to buy. So I'm very bullish this week. Enjoy the week.